Okay, this is a regular fib. So essentially what happened is when we sold off, we came down to the 382, we came back up, and then we came back again to the 236 so far of that whole entire move up. So we've only sold off 382 of that whole entire move up. So it looks really bad when you look at it and you say in green, the green fib is the same fib from here to there, and it's saying we came down already in between the 786 and the 886. So that's a substantial difference. Alright, that's a substantial difference in how far we've retraced so far. So now if we do the exact same thing, and we do from the top here to the bottom there, we have to draw this, like I said, that same way. So we pick the horizontal from the bottom right here, and then we take it to the top right there, and it's going to do the same thing. It's going to show us how far we've retraced now. So on this one, we've retraced back to the 786, almost to the 886. Alright, so we got to the 786 and then we sold off. We came all the way back down to the 382. And then from the 382 we bounced. We came back up to the 618, which is exactly where we're at right now. So the 382 to the 618, that's 2 fib level bounce. The 786 to the 382, that's a 3 level bounce. So it's 3 down, 2 up so far. So what I would expect to happen right now is another 1 back down. And the 1 back down is going to take us exactly down to that 7,900, 8,000 range, which is the support of green here. So essentially what would have happened is we went all the way up here. Okay, we bounce all the way up here, and then we come 3 down, 2 up, and then 1 back down. So we're basically just bouncing, and each bounce is a little less strong. And then it pins us right in this corner right here, which is the final decision point breakout for all of this. All the resistance, all the support, everything. But essentially, what this is saying is, why this is so important is that everybody else is looking at this retracement. Like when we came down here to the 3,000 zone, like we came in and we did over a 786 retracement. Okay, almost an 886 retracement. That's a massive retracement, 50% in between the two of them. It makes no sense that we even stop there if you're looking at Fibonacci. If you look at horizontal resistance, it makes sense. If you look at moving average, it makes sense. But if you look at Fibonacci, it doesn't really make much sense. Alright, but if you look at it with the correct fibs over here that are not affected by the log scale, when we came down, we only came down to the 382. And then we bounced up, and now we came back down. We came back down to the 236. That's not a respectable retracement. That's a super, super bullish retracement, which given the uptrend overall that Bitcoin's in, and for the time frame and everything that we're looking at, you know, that's fine. That's a super bullish retracement, and there's potential that that's realistic. But if this is an actual retracement, you know, of a real wave here or whatever, it's not unrealistic to think that this would come back down at least to the 0.5. So there's still possibility in the books that Bitcoin could come down as low as like 1,700 from any of these ranges right here, and it would still only be a 0.5 retracement. And everyone knows that the golden zone is everywhere from the 382 to the 618. So in all reality, you know, you could see a sub $1,000 Bitcoin, you know, according to Fibonacci, not affected by log scale. So I just wanted to bring that up because that is a very useful tool that you can use when you're looking at longer time horizons, and it's going to give you like an accuracy that most people are not even familiar with and don't even know that it exists. But if you do look at things on a longer time horizon is when you're going to really see that shine. If you're looking at like a 4-hour or something like that, these levels are going to make no difference when you put it on there, because this, all it does is it takes out the modifier in TradingView that affects it based on like percentage moves rather than like dollar movements. So there you have it, just a little trick of the trade there, and give you like a little more perspective over time as to what's really going on here. You know, I don't know. I feel like I'm the only one that's still, you know, bearish in this space. And I don't know if it's just me. Maybe I'm just, you know, stuck in this mindset or whatever. But I know my trading plan, and I know how I do technical analysis. And for long-term overall trend of this asset, to just put my money in it, sit back and be comfortable, it is not time yet. This looks like we are about to get a strong rejection from this same area and sell back off like massively. And when I say massively, I don't no, excuse me, I don't mean we need to put in a new low down here. All I mean is that it's going to seem like a massive move. All these moves up have seemed so ridiculously massive and awesome and great and everything, but these have all been like bearish retracements inside of a larger, they're all internal retracements is what we call them. When you have a move up and then you retrace inside of that move, that's an internal retracement. So since this move up here, everything from 20,000 has been internal. This is all internal right here. So the reason we're getting excited is that we can potentially do something we haven't done before. You know, taking out this low right here is still internal, but you know, it's big time bad. As we're taking out this high here is still internal, but it's big time good, because those are like strong signals inside of the market. But if we take out 20,000, that's external. That's when we're like putting in new highs. That's blue sky breakout. That's, you know, moon boy time. This is not moon boy time. This is not even close to moon boy time. As a matter of fact, the more I see the sentiment in the market right now and how excited everyone is and how bullish people are, and you know, everyone's saying this is it, this is the bull market, it reminds me of this area. It reminds me of this area, this area. It reminds me of right here, right when I started, you know, realized I need to make a YouTube channel. It reminds me right here. And it feels like it. It feels like we're right there again. And I'm not saying we don't get another upthrust here, but I think we get a strong pullback at least to retest the golden cross, you know, if not a rejection of it. So, and you know, I want to touch on this as well. I know that you know, not everyone that's into crypto is into traditional markets, but I just want to flip over here real quick and look at this. This is the daily S&P 500, the index SPX. This is obviously there's a massive sell-off, and that was the week before on Friday. That was yesterday. That's our Friday sell-offs right here. And if you look at that, what did that do? That just literally erased 40 something days of price action. Okay, that whole little extra little push up there just got erased. 40 something days of price action in one, you know, in a couple candles, but you know, really it was that first sell off, and then it was like the dead cat bounce and then the confirmation. So at this point in time, I mean, I would expect us to continue selling off. And you know, this thing has been able to push up forever because of the Fed and this, that, and the other, and interest rates and manipulation. You know, blue swan or black swan events are the type of thing where, you know, all of a sudden what's been working doesn't work anymore. So we have to be very careful in this market right now. And I know that like the, you know, the idea is, oh, Bitcoin's a non-correlated asset, so you know, it's going to go to the moon when the markets collapse and everything. But like statistically, we've never seen a crash in traditional markets while Bitcoin has existed. As a matter of fact, many would say that it was created because you know, of that or in anticipation of it, but we don't know what's really going to happen. And in the past, what we do know is that typically, you know, when these crises hit, that people are less likely to spend their money on things like, you know, investing in you know, assets and stuff like this. They're more likely to spend it on like protection and food and security. Flipping over here to the gold chart, you know, we're seeing gold is proven to be non-correlated to traditional markets, and now gold is like breaking out and confirming higher highs here, and looks like it's getting ready to move to the upside. So right now everything is pointing to me, the S&P, you know, traditional markets having this massive sell-off and a horrible end to the month. Gold having, you know, essentially looking like it's about to break out of, you know, 10 or 20 years of like price action patterns. And then in the meantime, you know, we have Bitcoin at this top like resistance area, you know, and a key fib level of an overall macro trend. And the entire market is bearish or bullish right now. I'm sorry. I feel like I'm the only one who's bearish, and I'm like, man, do I feel like I'm just going to die on my shield here? Am I just that stubborn, or am I onto something here? And you know, statistically speaking, I think we're more likely at this point in time, because everybody is so bullish, I think we're more likely to have at least some kind of a strong retracement, if not an actual sell-off back down to new lows. So And again, I'm not saying we're going to new lows or anything like that. I'm just saying it's still in the cards right now, based on Fibonacci, based on moving averages, based on support and resistance. And I am fully prepared to be wrong here and to flip over bullish and get excited. But the difference, if it takes me from right here, if I miss this right here, this little bit right there, okay, if I miss that little bit, even if I miss this little bit right here, I'm not worried about this. I'm not worried about this. I would love to capture that if we're going to go up 33%. I would love to, okay? But it's not worth it when you think about skip that 33% and you know that if we take that out, we're going to new highs. That's 81%. To retest the new highs. And realistically, the next target is probably like 30,000 or more. So it's not that big of a deal to miss a couple percent here. And we're not just going to go straight up in one candle. We'll go up, we'll come back, we'll retest like we always do for confirmation, because markets like confirmation. People like to make sure before they just throw their money at something, especially in assets like this. So well, there we have it. That's my long-term technical analysis. Looking at everything, everyone is just super, super bullish right now. Meanwhile, the stock market all of a sudden is dumping. There's, a black swan event going on here. And I don't think that it's going to end up being as serious as people are making it out to be. But there's already been thousands of casualties. So it's already a huge deal. It's already a horrible, horrible thing. But typically it's going to affect areas that are more like impoverished or like, less sophisticated. So that's the areas that can't really handle it and can't really contain it. But in like first world countries and everything, I don't think this is realistically like, a threat. Like most people are probably not going to know someone that dies because of this, but that doesn't make it any less serious, and that doesn't mean that it can't affect the entire world market, world economy, just because of that. Just because it's not a threat to your life does not mean that it can't change how world economics and trade operate, because it can't. This is the type of thing that changes trends. This is the type of thing that changes the world. And again, I don't want to freak anybody out. You shouldn't be worried for your safety necessarily, but be cautious. Be cautious not only with your health and your hygiene and your money, but be cautious with everything right now, because we are at a pivotal point in time in history. For a lot of things, energy, trade, politics, war, everything. I mean, times are changing. So don't think that the next, big wave isn't literally on the horizon. And that's going to affect everything. And, depending what it is and how it rolls, is how we're going to ride it. So appreciate everybody, all the support lately. Definitely to be a little more consistent. I am getting ready to upgrade the computer that I'm doing all my streaming and videos and everything with, as it's just been my backup computer and it's obviously like older and outdated. So, but I'm going to be doing live streams very soon as well. So I'm very excited to get to interact with the community and essentially like unveil myself, and you guys get to see what I look like. And I think it'll be a lot more personable when I can answer questions, we can talk, we can do technical analysis, we can interact. I'm very excited for it, and I think it's really going to help grow the community and make this much more personable. So there we have it, guys. Crypto Trend Trader, long-term technical analysis. I don't mean to be bearish here, but we're at the cusp. We're at the very end of this, and I get to flip the script very, very soon and reveal my true bullishness on Bitcoin if and when a couple very small criteria are met. But they have not been met yet, and we have to be very careful, because the times when people are most bullish is right before the fall. So remember that. Crypto Trend Trader, and I'm signing out.